There. Right into the mic. Okay. So, back to the matters of today and this week. I'm sure you all kind of picked up what was going on. I'm not going to go over the whole entire story. We're not CNBC here. I think most of you understand kind of what's going on. Probably turn off the alert sound, huh? The long story short is that a very smart investor on Wall Street Bets by the name of Deep Fucking Value found a system that has already existed for a very long time. In particular, the ability to short squeeze. Right? And hedge funds have been doing this to each other for years and years. It's not a new thing. It's supposed to be less now that the new laws are in place to not be allowed to go naked short. But in reality, short squeezes are still very much a possibility. And it's been kind of a gentleman's agreement not to do that to each other. Because everyone's been making money on these kind of shorts. Right? Destroying a company by shorting it hard and essentially making... Oh, thanks, Dark. Dark made it for me, by the way. So everyone's been making money because they're all shorting these companies into oblivion, and everyone's happy. In comes Reddit investor, YouTube investor, who did exactly what all these hedge funds were doing all this time. He did a very smart analysis. He noticed a company, GameStop in particular, was over 140% short, which means that there are more people shorting the stock, which means they're betting for it to go down than there are stock. Right? They were shorting more stock than existed. And the way to understand what this short squeeze mechanic is, you need to understand how a short works, right? So the way that the short works, and we're talking about T2, T-2, and T-3 shorts here, is you borrow a stock from somebody, and you borrow a stock. You then sell that at current price. Then in 2 days or 3 days, or sometimes in a different period, but usually 2 or 3 days, you have to return the stock to them. So you have to buy it back. And yeah, so also let me open up my Discord on the side because I'm probably getting questions and such. If you have any questions, just pop them into the questions channel. I'll try to get to them. So you have to get these stocks back. And what happens if the stock goes up in value? You still have to get that stock back, which means you need to buy the stock at a higher value than your short, so you're losing money on it. You have to buy it back and then give it back to the person you borrowed it from. The problem is if there's no stock to buy back, the price of the existing stocks that people are holding that this person now needs skyrockets. And that compounds in on itself because every short, right, it buys it at a higher and higher and higher price, and that's how you get a short squeeze. Typically, these don't last very long. If you look at the very pronounced short squeeze, it was Volkswagen. It was in 2006, and it lasted, I think, less than a few hours, and the price crashed very quickly after. But the smart behind this mechanic, smart behind this investor's idea was if I rally everyone on the internet, all the little guys together, with my due diligence, essentially, then we're not stealing from each other, which is what a normal pump is, right? If you're pumping a stock, then you're stealing from each other because the only person that's winning is the person who was in at first and who manages to sell last to the biggest idiot. And the biggest idiot is stuck holding the bag. That price goes down very fast. Usually at a pump and dump, there's like 10% winners and 90% losers. So he found a way to not have that effect go on, and that's compounding on the excitement. And on top of that, he provided Wall Street with a signal, essentially showing, hey, 1.9 million people are about to buy this stock. And of course, that amplified the effect. And Wall Street bought in, funds bought in, smart investors bought in. This wasn't just Wall Street Bets pushing GameStop. It was gangbusters for a lot of people. And little guys, people who've never heard of stocks before, people who've never been on the stock market, but also big guys with big portfolios were trying to play this movement. Fast forward to Thursday, a day before the short squeeze was supposed to happen, a day before these options expire. And now what we're seeing is brokers started not offering the stock anymore. Now, there's a bunch of theories about why that is, and I have my own, and you guys have heard me talk about it in the chat. And one of them is, the conspiracy theory that the powers that be that buy the order flows from Robinhood, the ones that pay for Robinhood to exist, essentially, the ones that you essentially, the devil you sign with when you sign up with Robinhood, because you're commission free, right? So you don't pay commissions, and everyone was raving about that half a year ago. But now, the consequences of that start to rear its ugly head, and there's a very good chance that the powers that be told Robinhood, listen, if you continue offering me this option flow with these stocks in it, then I'm not going to accept it, and essentially turning off their income. Exactly. Nothing's free, as was said in the chat. And what's more important, if you don't pay for a product, you're the product. That's something to remember. So I think this could be a thing that's going on. I don't know for sure. It's pending evidence, and we might never find out because these things have a tendency to get swept under the rug. But another theory is that simply the counting houses have a new set of rules from the SEC since 2010, where you need to keep a certain level of margin, certain level of cash on hand, and then that goes for brokers and it goes for the counting house. What simply could have happened, and that seems to be somewhat corroborated by the news, is Robinhood ran out of liquidity. There was so much sudden interest of investors buying these stocks at outrageous risks, and as Robinhood offers a ton of margin, that Robinhood ran out of the cash to back up their trades, and they had to press the pause button to build up the liquidity to be able to continue trading, or even suspend it entirely until the craze is over, because they simply do not have the liquidity to back up the trades at the counting house, which also takes about 2 days to process the payments and from Robinhood. If in those 2 days Robinhood goes from a place where they can pay to a place where they cannot pay, then the counting house is in for a lot of money, and that's what happened in the previous crisis, and that's why short selling is now illegal in so many places. So that's the long story short on this short squeeze that happened. A short explanation. Yeah, I mean, liquidity issues, the news have definitely corroborated there are liquidity issues. It's just unclear to what extent, and it's unclear if other things played a part as well. So I'm curious to find out. I wouldn't be surprised if there was some level of foul play. At the end of the day, the CEO of Capital Investments is the same CEO who pled guilty to insider trading 10 years ago. So, yeah, the odds of something dirty happening behind the scenes are high, but we don't have evidence. So pending evidence, this is what we know. So that's what happened, and that caused a lot of uncertainty between Wall Street bets investors. A lot of these stocks simply became untradeable or only sellable, and what happens when the stock can only be sold? It goes down. Now we're at today. The stocks are trading, I have them up on my screen here. AMC is trading at 12.3. AG, silver is trading at 17.75. Candy at 9.22. Let's see. Naked, I should probably pull up Naked as well. Let's see. Naked is trading at 1.6 and GME at 277. I'm going to be mentioning silver a lot, so if you don't like it, you know where the exit is. I've been talking about silver for the past 6 months, so of course I'm going to take the opportunity to talk about it. It's also one of the 3 things I like to call myself an expert on, so we are. GME is trading at about 250, 275. The theory on Wall Street bets right now is that it's going to skyrocket back up because of the short squeeze. My personal theory is that the hedge funds are long gone. They already rolled forward their shorts. They bought what they needed to buy, took the L. Sure, they lost some money, but they didn't lose nearly as much money as they would have lost if this would have gone the way that Wall Street bets wanted it to go. And I don't think we're going to see a squeeze. I think right now we're going to see a slow petering out and the Wall Street bet's cannibalizing itself, which will only demoralize it further. This is dishwater. Yeah, that's what that. This is bitter lemon with a bit of Johnny Walker. It's good. So, oh my god, thoughts on? Let's go. I didn't think I'd see it on my own chat, but I've become the evil that I so hate. So I think personally that the hedge funds aren't stupid, and they've been doing this for years and years. They came up with a strategy yesterday. Between the drops on GME, they have been buying. When it went high, they've been selling, and I think they've been trading the hell out of this stock, and now we're finding ourselves in a position where their losses won't be that big, and there are enough shares for them to buy without it squeezing. And yes, indeed, same rules as the Discord apply. If you're here not from the Discord, from somewhere else, you can find the Discord link down below. So feel free to join. You can read up on the rules there, and Jerry will be very, very cross with you if you break these rules. Thank you for all the follows, Michelson, and I can quickly spot a follow before that. Emil Vatsoy, Strange Doctor, Zesame, Lil Pan, Noob Live, the Sexy Ninja, but you already know. So that's where we stand right now, and I personally think I'm not your personal advisor. I'm not your financial advisor. I don't think I don't. You don't need to listen to me. Do your own research and come up with your own decision. I think AMC. I think GME are done. I don't think they're going to reach 300. I don't think they're going to reach 400. I don't think they're going to reach 500. Maybe they'll tap it, and if you're lucky, you can get rid of it there. I don't see it happening, and I might piss off some Wall Street Bets people right here, and because hold, and if you believe in that, sure, by all means hold. You might get lucky, but I genuinely doubt that these shorts will close today the way that you expect them to. And one piece of advice is, if you do believe this is going to happen, is set a sell order for like $500, $600, $700, $800, $2,000 if you're that confident. Because if the squeeze happens, it's going to be very fast. So you want to have a sell order ready for when it starts squeezing, because it could be over in a flash of a second. You might get filled, you might not in that scenario, but if you don't have your sell order ready, you're not going to get filled at all. My opinion is to find an exit. I don't know if that means to sell quickly, but that means you intend to hold overnight or towards tonight, hoping to see a squeeze. I think you're hoping you're suffering from false hope. So, where does that leave us? A couple things. First of all, I'd like to talk about gains and losses today and this week. A lot of you experienced euphoric gains, including myself. I've been trading this just as much as everyone else this entire week. And unfortunately, a lot of us experienced catastrophic losses as well in the past 2 days. I personally have been lucky. I exited all my trades yesterday in the green. I didn't lose on any of the trades except for one. And net, I'm very green. But not everyone is that lucky, and this was more luck than wisdom, or there was definitely a lot of luck involved in choosing my exit. I was conservative because I was worried about a move like this, and discussing with the people around me, and I came to the conclusion that I wanted to take my profits and not risk it further. So I made an exit in all of these stocks. I also exited my Bitcoin position, and I am rather conservative with my money right now because I want to see what happens next week before I re-enter the market with all that money. I do intend to re-enter. I'm not a perma bear, as it were. So that's on your gains. If you made gains, fantastic. Bless you. If you lost money, it's okay. A lot of people lost money. Don't feel embarrassed. Don't feel like you cannot talk about it. These things happen. I hope it's a recoverable amount for you. And don't allow it to let you spiral into going into the market or back into the market at unnecessary values where you're you're buying in the hope of recovering your money, because that's how gamblers spiral, and that goes bad very, very fast. Double and triple your losses in no time. So that's on profits and losses this week. On the flip side, if you won your trades, don't let euphoria get to you. Don't kid yourself that you're some sort of genius. I know the feeling. I've been having it this week. I've had some killer trades, and that gives you a huge adrenaline high, and it's fantastic. Enjoy it. But end of the day, realize like, okay, this is unique, and it's definitely, if you spot it again, go for it. But don't think that you're suddenly untouchable, because every one of us remains vulnerable to all sorts of shenanigans on the market. So where does all this effort and all this revolutionary movement go now? Because Wall Street Bets isn't just going to disappear. In fact, the movement grew. There is 5.5 million people on the Reddit last time I checked. I'm sure it's grown since then. It's been a couple hours. 5.8, 6 million, something like that's my guess. Kind of a genius, though, the way he called the G yesterday. I mean, I read the tape and I got lucky. There was luck involved, and I will 100% admit that there was definitely luck involved. So don't kid yourself in thinking that I'm some sort of genius. I will sometimes make outrageous claims, for the fun of it, or because I genuinely believe it. But I could be wrong just as well. So don't follow me blindly. Do your own research. And yeah, so where does this all go? And I think this is an interesting part of the talk. And this is where, if you don't like to hear about the silver, welcome, Drunken Monkey. If you don't want to hear about silver, you're going to be disappointed. So I think a lot of this trading will remain in penny stocks. It will remain going towards assets like Dogecoin. It will continue going towards things like Naked, Bitcoin. I think money goes in that direction now. GME also will remain traded, I think. Same with AMC. It will be bag holders for a long time. And it will be demoralized people. So I think the movement will appear at the surface to be just as big. But I think a lot of these traders will remain on the sidelines for a while until another success story emerges. So these stocks will see some activity, but I think it will be muted and it will effectively be down. So I'm not going to be investing in them. The thing I think about Dogecoin is I think it's the worst. I think the literal worst investment you can make on the market right now. And, I'll probably be seeing memes in a couple weeks where it's like, Joker called it the worst at 0.5. Look at it now. It's $10. But the reason I think it's the worst is Dogecoin is the community cannibalizing itself. It's exactly what the funds want, what the old guard wants, because Dogecoin is only worth what you're willing to pay for it. And if you ask somebody, if you really press them and you ask them, who do you sell to? Who do you sell your Dogecoin to? You bought it at 0.5. Who do you sell it to? And the answer is, well, the sucker that wants to have it, right? Sucker that wants to have my Dogecoin at $1. And that begs the question, what if you're the sucker? Somebody else bought at 0.25 and intends to sell at 0.5 to the sucker that wants to have it. So there's my opinion on Dogecoin. It's this community cannibalizing itself. It's 10% is going to profit off the 90% that play it. And, the people that will profit the most are people really pumping it. And that's some influencers. That's some people that don't have the best intentions, that know how to manipulate the market, know how to manipulate their following. Don't fall for that shit. There is no intrinsic value to the Dogecoin. It doesn't have the store of value argument that Bitcoin might have. If you believe it in or not, it's a different case entirely. But it doesn't have any of that going for it. There's no mechanic. There's no short squeeze. There's no nothing. So that's where I stand on Dogecoin. And that leaves us what I believe the community should do next and what I think the community will do next. And that's to talk about silver. I've been a silver bull for the past 10 years. And I've been a purchaser of silver since $14. I think my average purchase price sits at 14.7 now. And what that means, why I think silver is a winner in today's market and in today's environment, is the silver ratio, which has been historical with gold to a certain number, is is bigger than ever. So the difference between silver and gold is very large right now, and it used to be much smaller. And that ratio contracts and it expands, and it's always done this. But it's never done this to this degree. It's definitely wider than we've ever seen. And we're going to see that ratio become smaller and smaller and smaller, especially as QE, quantitative easing, as printing of money proceeds. We're going to see the silver and gold ratio become smaller. We're going to see gold and other tangible commodities and assets become worth more and more. And that we're already seeing that in bricks and mortar. We're already seeing that in the housing market. Houses are skyrocketing, even in places where they're hard to sell. Houses are extremely expensive because all that cash is flowing into tangible assets, right? Something that the government cannot print. The government can't print houses. They can't print gold. And they can't print silver. Now, in addition to that, we have a few supply situations with silver. So a little bit of history on silver. Silver has been, or is one of the most manipulated commodities in the world for the past, I don't know, probably 50 years, but let's say 25. And how does that manipulation of silver look? Because people often say it, but that doesn't quite give you an idea of how that manipulation. So that manipulation works on different fronts, right? The first thing that happens with silver is the long-short manipulation. So what we're seeing is banks take a short position on silver, right? They press down the price. They sell large quantities of silver as they get a juicy short position. And that drives down the price of silver. Then on the back of that, they purchase long silver. They purchase silver when it's cheap. Then silver is going to build up back again as retail buys into silver. Welcome, welcome. Is costs difficult name. As retail starts buying silver, as industry starts buying silver, the price creeps up again, and they sell their longs. And when they all sell their longs at the same time, close to their expiration date of their shorts, the price tanks, right? They close their shorts for a profit, and they buy longs. They buy new shorts, and then they buy longs again. And that's the rhythm that banks have been doing for a very long time now. It's automated right now. I'm pretty sure there's just bots doing it. And it's been making them a ton of money, right? That makes you a ton of money already. Now, on top of that, what happens with all these banks that are buying and selling silver that aren't actually standing for delivery? They're not, like 50% of silver is reserved for production, right? About 50% goes into production. At least 50% for stuff like jewelry, for holding, for banks, for trading. This 50%, this remaining 50% of silver is majorly traded by Goldman Sachs and by a few other major banks. And that's where the manipulation is playing out. So what's happening is these silver bars, they're never being requested. They never stand for delivery. They just trade the paper. And what did COMEX do, which is the place where we store most of the silver and gold? COMEX says, okay, you know what? I've been selling this 1 bar of silver to one bank, and that's how it used to work, right? You have 1 bar of silver, you sell it on paper to one person. This person comes with his little receipt, you can get his silver back. But then they thought, you know what? If this person never asks for his silver, what's stopping me from selling 1 bar of silver to 2 people? That worked. But if it works for 2, try 4. That worked too. How about 8? Yeah, 8 works too. Well, say 1 in 10 people request their silver, everything's fine because you've sold it to these many people, but you have a stack. So every 1 in 10 comes to get their silver, and you can give it off the stack, and everything looks fine and dandy. Right now, silver is estimated to be sold, each bar, between 150 and 250 times. Right? Imagine going to an airplane, right? You're about to go on vacation. You booked a beautiful vacation to Hawaii. You arrive at the airfield. You're in, there's a big line. You're like, that's a lot of people for one airplane. And you arrive in the plane itself, and everyone's bunched up around your seat. And you're like, what the heck's going on? And everyone holds up their seat ticket, and it says 24B. And you look at your ticket, and it also says 24B. Well, gosh darn it. I'm duped. That's exactly what's going on with silver right now. And that works as long as the they're not standing for delivery, right? And it's making COMEX, again, a lot of money. Because each bar of silver that they sell is a little bit of profit for them. So if they sell one bar 10 times, that's a lot of profit for them. Right? So what's happening is when people start standing for delivery, or when this system implodes, because eventually it cannot economically be maintained, right? When this system explodes, you start to have, and that's supercharged right now because of this Reddit movement, you will start to have people coming up with their tickets saying, hey, you know what? I want my silver, please. And that's going to deplete the stack of silver at COMEX in no time. And what happens when suddenly the silver's gone? The COMEX is like, well, we're running on fumes already. But what if everyone requests their silver at the same time? That price is going to skyrocket because 10 people are holding up their ticket for that 1 bar of silver. What happens to that 1 bar of silver? It becomes 10 times worth the price, right? So we're seeing in silver right now, if you look at historically what price silver was at, and if you convert those dollars to modern dollars, if you convert that as per the current money supply, you see that silver always kind of traded around 420 and 500, sorry, between 520 and $580 in current money, current dollars. Right now the price is $25. For every dollar silver goes up, banks lose about 350 million silver. If there's $350 million. If there's one thing you can trade as the people that sticks it to the man, that sticks it to the suit, it is silver. Breaking this bank monopoly that they have on manipulating commodities, which is the one thing that's been backing up sound money, will literally steal money from these organizations. One moment. Or somebody at the door. Will literally take money out of the hands of these suits. Right? So that's why we're seeing this extreme buy pressure on silver right now. And the funny thing is, it's been skyrocketing on maybe 10, 15% hype on Wall Street bets. It hasn't gone fully mainstream yet. As soon as this gains traction, we're going to see this moving at a very fast pace. So where does that leave you? What can you do to be part of this? And again, this is not investment advice. Do your own research. Look into the COMEX manipulation of silver. Look into the silver supply. I've got some numbers for you in just a minute, but let me explain how you can participate if you think that this is the new GME. And I personally think it's going to be far more. It's going to be far more than GME. It's going to be, we're going to see 25 to 1,000. I think personally, easily. And then maybe it normalizes from there around 600-700. So what can you do? You can buy silver, physical silver ETFs. That means you need to buy an ETF that holds silver in your name, physical, actual silver. That's important because if it's a paper ETF, you're not making a dent because they'll just sell more paper. What you need to do is get an ETF that forces COMEX to deliver physical. There's a few of those out there. PSLV, Sprott Physical Silver, has been adamant about how he backs up his silver, and he's audited every year. He's very adamant about making sure that there's actual physical backing up his fund. And SLV, which is backed by BlackRock. Now, BlackRock is big enough that I don't think they'll risk their reputation. However, we've seen crazier stuff these days. So I personally trust Sprott better, but I think either of them would be good. If you're in Europe, you can look into the Zürcher Kantonale Bank, which is the Bank of Zurich. They have a huge vault under the main street in Zurich, holding a ton of silver and gold. Ticker for that is ZSIL, ZSIL. And they are also a physical ETF, so they will hold silver in your name, an actual silver, 1-to-1. Thanks, Laser October. He said, this is an amazing history on silver manipulation and tons of documented proof. It's a long read, but once you get through it, you will have a full understanding of how serious this is. We'll probably repost that on the Discord, so if you need that link, you can find it on the Discord in a bit. Yeah, we'll get to the Discord questions in a minute. I'm juggling a couple things at the same time. So the next thing you can buy are silver miners. So the one that's being targeted right now is AG, First Majestic Silver, which is available in both Europe and the US. In Europe, it's available on Xetra. In the US, it's available on the NASDAQ, I believe. So why this one? First of all, it has a 30% short float, which means that there's 30% of the stocks are shorted, which is a really good number. Like that's already fine enough to trigger a short squeeze. There's a second more important reason, however, and that's they have held their silver this entire year in reserves, unlike every other miner who's been selling their silver as they mine it. They have been holding their silver, which means that they have a huge reserve right now. Their assets to liabilities is like 3.5. Right? So AG, I think, will be one of the fastest risers. It's also the thing that's gaining traction on Wall Street bets. If you want a silver miner, AG, I think, will rise the fastest. There are some other options. I personally think Pan American Silver is the best positioned miner of 2021. So I think Pan American will be fundamentally the best miner. I don't think it will be the biggest riser. I used to think that, but I think AG will be it now. Pan American will be among the best tickers you can have. There's junior miners, junior discovery you can definitely look into. And those can rise and fall even faster. But from the big names, AG and PAS, or Pan American Silver, PAAS, are the silver miners that you can look into. Next is the final ticker I'm going to recommend. It's a miner ETF called ZSIL. So those are, sorry, not ZSIL, it's SILJ, SILJ. Which are junior silver miners. It's an ETF of a bunch of junior silver miners, the biggest ones, the most successful ones. It won't catch, all the successful exploration miners, but it will catch quite a lot of them. So I think SILJ, SILJ, will also be an excellent choice in it. So before I move on to the next topic, I want to grab some questions. So let's take a look. Question from Enigma. Borrowing a stock to short, is it different than buying on margin? Yes, it is. Shorting a stock is borrowing a stock and then selling it at the current price and giving it back to someone after, which is often done on margin. There's a difference there, but it's subtle. Are you recording this so I can watch it later? Twitch is restricted on school Wi-Fi. Yes, I am recording this and we'll be posting it on YouTube. Do you think, so that's Dark Appellation, do you ever think that some rich people may get together and do their own pump and dump, outnumbering the small guys? 1,000 small guys equals one big guy investing. Question from Zesame on Twitch. Yes, of course. Rich people have been doing pump and dumps for generations and they'll keep doing that. There's no doubt in my mind that at expensive business dinners and at charity events, these Wall Street executives, CEOs, and such get together and talk about this stuff in a non-illegal manner, but everyone understands the message. But I think this is a lot more common than you might think. Let me know if I understood your question correctly, because I might have misunderstood what you were asking. J-Show asks, what makes you say this will gain traction? Silver is much more than GME and hedges. Good question. Let me get you some numbers. So if the volume of GME trades yesterday, and that is the day that you couldn't trade GME, right, that brokers closed, if the volume of trades on GME, and I'm talking to buy, on GME occurred on silver, you would be purchasing about a year's worth of production of silver in a day. Okay, let that sink in for a moment. If the GME purchase pressure would be on silver, we would be purchasing, as a mass, more than a year's worth of production. Now, a year's worth of production takes time to distribute as well, right? So somebody did the math. That's about triple the time of distribution. If that compounds with the fact that there's already a shortage of silver, it's estimated right now by some people I follow that you're looking at 150 years of COMEX deliveries ordered through just the Wall Street bets pressure that we've built up before in a matter of weeks. 150 years worth of silver deliveries. So, yes, there's a lot more silver than there is GME out there. The market cap of it is bigger. But there isn't that much silver out there, and the production is very small. In fact, a lot of people are arguing that 2021 is one of the final years that we're going to see fruitful silver mining, and that the years after it's going to shrink and shrink and shrink. So that's why I think silver is very much within the targets. A little note on gold as well, which will move together with silver in this case. And this got kind of lost in all the hub, but on February 21st, there were 33,327 gold contracts still open and standing as the contract went off board and into delivery last night. That's about 3 to 4 times the historical pace. COMEX is being squeezed already right now. That's 3 to 4 times. So, and that's compared to last year. We're already with this tiny bit of pressuring COMEX to deliver 4 times as much precious metals as they did last year. And typically, January, February are good months for precious metals. You can't say, "Oh, precious metals in January, February is always terrible always terrible volumes." No, the opposite. January, February, the most volumes are traded. So, yeah, I think the squeeze on COMEX is tangible, and I think if COMEX explodes, we're not going to see small moves like. I think the moves you saw in Naked in AMC are nothing compared to what we'll see in silver. It's going to grow exponentially. From Herbacos, let's see. Would you say to invest silver in miners or the physical silver holders first? Get both. I think you're doing well with both. Miners tend to move more volatile than ETF holders. So if you want more safe movements, get an ETF. If you want more volatility, more potential upside, get miners. How many moons will silver see? We're going to see the moon first, just the moon. And from there, we'll just kind of bounce off onto Mars. And from there, I don't know. We'll have to see where Elon's built any highways. Next question. When was this all released to the public, the manipulation of silver by banks? I mean, technically it hasn't been released to the public. There's no one officially releasing it, and governments have been turning a blind eye to it for a long time because it plays into the power of fiat currencies. It makes banks and fiat currencies more powerful to manipulate precious metals because precious metals put the power in the people's hands. If the people buy precious metals, there's pressure on the economy to be real, and that's something that's bad if you want to control the people. You want to control the people, control the currency. That's something that one of my favorite monetary philosophers said. Moving on to next question. Does anyone have a summation on the tickers mentioned so I can do the research? I will post the tickers in one of the channels with a tag. To @SMLC streams, so make sure to join, type I am SMLC streams in the bot spamming channel to get the ping. When was this all released to public? Already got that one. Can you explain gamma squeezes? When, what time do they happen? Gamma squeeze, all the gamma squeeze means is that all of these puts are being foreclosed, or all these puts are being closed on each other, right? So all these puts being closed together. The hedge fund doesn't have a choice at this point. They have to buy, right? The clearinghouse is buying on their behalf because they have the liquidity. They reserve that. They're buying it on their behalf at whatever market price, right? They have to buy at whatever the market price is. But if there's no stock out there, that means the price will go up and up and up and up very fast. And because every little piece of liquidity being added to the market gets picked up straight away, that only increases the buy pressure further. So that's what a gamma squeeze is. The thing is, when it happens, there isn't really a set moment for it because there's not really a moment where we've defined when the trigger needs to be pulled. And more importantly, if the hedge funds already covered most of their shorts, it's never going to happen. Could you explain, or I got that one, what exactly is the difference between AG and SLV? AG is a silver miner. SLV is a silver ETF. So the miner, in this case, holds some physical, so that it has in common with SLV. But it's a miner, so it mines, or it has miners on the contract that mine silver, take it out of the ground, and sell it. So silver is very expensive. They do very well for themselves. SLV is an ETF that says for every dollar you put in, I'm going to make sure I have the equivalent in silver, in physical silver in a vault. And that's what the SLV and PSLV funds do, which also means that it doesn't matter how many stocks are outstanding for those things. It doesn't really matter if there's buy pressure on the ETF. What matters is the price of the metal. What did you mean by going into ETFs versus buying silver on paper? Good question. So if you buy just any silver ETF, there's a good chance you bought one that holds a percentage of their holdings in paper silver. So they can say, oh, I hold silver on your name, but what they're actually holding is a piece of paper saying, I have silver in the Comex Bank. That's on my name. The thing with the paper silver is they sell multiple of those for the same bar. So when doomsday comes and everyone come to claim their piece of silver, your ETF is going to stand there with their dick in their hand and say, well, I've got all these tickets for silver, but everyone else has the tickets to the same one. So first come, first serve. And you might end up without your silver. More importantly, if they issue more and more paper, then your purchase of paper silver won't matter. So you need to find an ETF, if you're going to buy into this, you need to find an ETF that guarantees holding physical silver, actual physical silver, on your behalf. And that's SLV and PSLV. There's a few others, but those are the two that I think I'm going to see get pumped in the near future. Taking a look at the chat on PAS and AG up 1%. Yeah, we're doing it, boys. Is it safe to buy ETFs on commission-free brokers like Robinhood? I think so, for the express reason that it's almost impossible for Robinhood to just block silver trade in general. I believe you can evaluate what the ETF actually holds and see what on their holdings. I'll Twitter report that they covered 6 billion out of 10 billion of their gamma. Could you repeat what you said between miners and silver? I walked away and heard you say something about volatility. Yeah, so the difference between a miner and holding physical commodity is the miner is working at a leverage, right? For roughly, and I say leverage not because it's an actual leverage, but because that's how the price moves. For every $1 silver stock moves, the miners move about $4. That's the rough equivalent. That's the rough estimate. So a miner moves about 4 times as fast as silver does. So if silver goes down, miners go down 4 times as fast. Silver goes up, miners go up about 4 times as fast. And it differs per miner. Some sees that ratio less or more, and differs on the time, differs on sentiment. There's a lot of elements that, of course, determine the price, but that's the rule of thumb. 1 to 4. So silver miners are more volatile. You purchase them. I promised I would talk about silver, which I've done, and I don't want to make it just entirely about silver. If metals squeeze, why does that affect miners like AG? The reason that affects miners is if silver squeeze, that means the price of silver goes up. So for every bit of silver that this miner gets out of the ground, but also for every future ounce of silver they get out of the ground, the prices increase. So right now, silver miners, that's a cool thing about precious metals right now. These miners are producing at 2010 prices. And 2010 prices were extremely high. So they built their production to be profitable at $1,500 gold and $16 silver. So they've been profitable for a while, and their cash flow is amazing. These are not only financially sound companies, unlike GME, unlike AMC, they're financially sound, but also if the silver price goes up, their cash flow triples, goes times 10. So that will ramp up the stock price very fast because they have a ton of cash on hand, which they can use for acquisitions, for stock buyback, for dividends, and of course to expand their mining operation. Thank you so much, everyone, for all your questions. It's exciting to have everyone here. And so in total, AG, PAS, and SLV. Yes, that's what I'm saying. So let's see, what else did we decide to talk about today? Right. I was going to give you an insight into how hedge funds work and think, and how I think you can kind of position yourself in today's environment. I'm going to be talking for a little bit, but I'll try to kind of answer some questions as we go along. Hedge funds, the reason you pay a hedge fund to run your money over a passive fund is that hedge funds find creative ways use your money to make as much money as possible. So the potential returns on a hedge fund are higher if they're managed well. But they're also more volatile. So you could also lose more money. If their strategy fails, a hedge fund is due to lose a lot of money. This works out in an environment like we had before, where you can go 140%, 160% short on something and nobody was going to interfere with you. The stock is as good as dead, and there will be almost guaranteed a flow of money this whole time. And then you're going to get a nice, consistent 10, 15% returns on that move. So that's how a hedge fund thinks. They're creative. They like to short things. They don't mind if they break or fix something. Doesn't matter. What matters is they make money, which can be seen as greedy, but it's part of the market mechanic, and I don't hold it against hedge funds that's the way they do business. What I do hold against hedge funds is what happened recently, and that's that the rules of the game were changed in the middle of the game. You can't just be playing a game of roulette and have your, bet on 22 and the hedge funds is on white, and it hits 22 and the hedge fund's like, actually, that's not 22, that's 23. Change the sticker, as you can see. There's the they shove your buck like the 24. That's where you start seeing me getting pissed off with hedge funds, is when they push to change the rules, and when they cry foul when retail investors start to stand up for themselves. And by the way, little note, the GME just hit 295, so maybe we will see that much coveted 300. I think that would be a nice moment to exit, but again, it might squeeze and I might be totally wrong, so don't take my word for gospel. So that's how a hedge fund thinks, and I know how this works because I worked at an investment firm. It wasn't a hedge fund, but I worked at an investment bank, and I have a lot of ex-hedge fund managers around me who talk to on a regular basis, so I know how they think. And to be frank with you, the way hedge funds think, most of them anyway, is very early on in this whole Wall Street Bets scenario, they all said, and beat him, join him. And I'll guarantee you a lot of these hedge funds, either in private portfolios or in their public hedge fund portfolio, started trading GME just as hard as Wall Street Bets did. And I also guarantee you that they'll probably have been informed when to exit well before retail did. Let's see here. I saw a question from Etfs. Might have been a while. So the most known traded precious metals are silver and gold. What about other noble metals like platinum, etc.? I must admit, I'm not a huge expert on platinum. I know copper is very much used in industry. I have a position in copper. I know that there is a huge shortage on palladium. So one thing you can do is look into the Russian reports from the company Norilsk, and they report on their palladium mining activities. They're one of the only ones that have these numbers, and that shows a major shortage. So every commodity is going to pump in an inflationary environment. And that's something that I think is very important to underline here. I don't think precious metals are a hedge against the stock market. They're not. Precious metals tend to move with the stock market. They are a hedge against inflation and against bank bullshit, against this infinite money printing that's happening. And I think I'm talking to a fairly young audience here. So I want to emphasize, and this is something that's very close to my heart, that I think I want to. It's something I want to stand for in my generation, and that I want to build my career towards fighting, be it politically or through channels like this, or even just as an individual investor. The financial can is being kicked down the road right now by generations above us, 2-3 generations above us, and even the generation directly above us. Right? We had a crisis 10 years ago, and instead of taking our lumps and taking the L on that crisis and making actual sweeping changes, we swept it under the rug. No one went to jail, and we used money printing, a method we've seen in history countless times, that the debasement of currency leads to disaster, a policy we know is disastrous, and we've allowed it to exist for over 10 years. And there's no plan of exiting, because an exit is frankly impossible. But they tried in 2018 when they thought the crisis was somewhat over, they raised rates by a quarter, and the whole economy screamed murder, and they reverted it in no time. They cannot raise rates. We're in a position right now that this can of debt is being kicked down and kicked down and kicked down, and it's just this heap of shit that's dropped on our generation. And I think it's very important to realize that this is something that we're going to have to reckon with sooner rather than later. At some point, the bill's going to come. Right? We're all partying now, but at some point, the bill's going to come. And I hope that a lot of people my age will be ready for that and will be ready to tackle that in modern new ways. And hopefully, it will be not as bad as I think it might be. So I think the silver and gold rally is a long time coming, and it's been due for a while. And I think it's going to happen regardless of this Wall Street Bets movement. But I think this Wall Street Bets movement might just make it go nuclear way faster than it would have otherwise been. And in that note, and I went off on a tangent here, but what I was trying to say is in an inflationary environment, which is I think what we're going to see, commodities in general do well. So precious or noble metals, precious metals, but also lean hogs. I need a hog emoji on my chat. Yo, Dark. That's something we need. Hog emoji. From Kieran, let's see. Sorry, Dioma first. Dioma, do you follow Apple? If so, why is that? It's been dropping as of recently when they saw 10 billion over their mark on revenue. Apple's priced for perfection, and they wanted beyond perfection, and we got exactly that. And it still wasn't enough for investors. So what we're seeing here is twofold. I think we see hedge funds selling long positions in things like Apple, where you see a 3-4% a year return, to free up money to cover their shorts. So that's one reason why I think Apple is down. Second reason Apple is down is there's earnings for other companies that people are hyped about. So I think we're seeing money flow into that, and I think we see money rotating from tech into safer assets right now, including silver and gold, because tech is going to be correct. If the stock market corrects, tech will also feel a correction. So I think those are the main reasons why we're seeing Apple down right now. But those are just my hunch. I've been following them for a while. I'm a big Apple investor. I think their revenue and their balance sheet is ironclad. So I don't think they're going to see too big of problems. But if I have to guess, that's my guess. From Kieran, Joker, can you look at the volume of trades recently for GME to see if they would have been able to buy enough stocks to cover their shorts? That's nearly impossible. You can't just look at the volume and be like, well, those are hedge funds buying, clearly. You can make educated guesses looking at spikes, but I've seen guesstimates that 6 out of 10 are covered, 8 out of 10, 9 out of 10, 10 out of 10. It's nearly impossible to guess. So I think that we're in a place right now where we just simply don't know. Make another post about silver on Wall Street Bets once GME dies. Yes, I do think that the people I've been talking to have been talking about posting more silver threads once the GME thing dies next week. Hog emotes. We don't have the pig. We do not. We need a special. But yeah, we need a lean hog. That was just a regular hog. We need lean hogs. Robinhood isn't letting me buy more than one share of SLV. Really, Robinhood's starting to limit it. Well, that's a bullish sign. There's plenty of other tickers to go for, so don't be shy to hit it. I did look at the volume of GME. I don't think it's gonna break 300, let alone 400 anymore. But who knows? Like I said, I could be wrong. Let's look at it together. Honestly, I can open it up on my screen right here. Also invited someone on, but they couldn't make it today. They have quite a bit of knowledge on the matter. Oh, I'm dumb. I just re-added it. Well, so I was already here. Let's see. Oh no, cursed. Only see black. Cursed. Presentation. Microsoft Edge. Do it. Yes, is fighting me too. The conspiracy guys. All right, let me reload the source. There's the one. All right. Yay, it's working. Perfect. All right, so first of all, let me turn off my portfolio so I don't click that by accident. Let's take a quick look at what COMEX manipulation looks like. What I have here is a chart of gold futures. And you see these red candles? These are sell attacks or short attacks by COMEX, dropping the price and selling such huge amounts of gold in within a minute, right? To tank the price this far down and demoralize traders and to buy new shorts, right? Or to close out the shorts and buy new longs. And this is silver. This is what a silver attack looks like. This is not a retailer sell-off. This is a sell-off that's, like, if you look at the volume, it's crazy. This is a sell-off of a bank or a bot suddenly tanking the price so they can do their long-short shenanigans again. So that is something that I think is important to show you. So here we have AMC. Let's see, let's go to the hourly chart. And we have here some old trend lines. 28th of January. We're looking at how much volume here. Robinhood has supposed limited ownership of the meme stock to 1 and disabled exercising of calls. That sounds like Robinhood. So the average volume of AMC, okay, well, actually we should look at GME. I think that gives a better idea. Average volume on GME sits at a mere 101 million. And we saw what, like 1.2 billion a couple days ago? Just trying to find the average volume of a couple days ago, which was quite high. But anyway, the point is, if we look at the volume on GME starting yesterday, looks fairly stable. You see a few sell attacks here, but honestly, Yeah, more activity recently, actually, the last 2 days. If you realize that the exchanges are closed and you look, or closed most of the day, and you look at this activity right here, just today, all the way through, and compare that to yesterday, yeah, the volume yesterday was much lower, right? Yeah, I cannot glean from, and there's no way to see like, oh, this volume was all hedge funds. What I know is how the hedge funds trade, and they wouldn't have traded. They wouldn't have just bought, right? They wouldn't have just bought to cover. Not how they work. They buy and then hold. Then if the price spikes, because others are buying it too, other hedge funds, right? They sell and they buy and they sell, and that's how they create extra money to buy more back. You're seeing a lot of this volume is looks like retail volume, but actually it's just actively traded hedge funds. But like, it's already 9 p.m. for me. That makes it afternoon for the US. The market closes in an hour. I'm not seeing any squeeze. GME looks. I don't see it. Gamma squeeze can happen after market. I don't know, actually. I don't know if the counting houses would allow it to happen after market with very little volatility, or with very little liquidity. Yeah, squeeze might happen at the end of the day. No, you're right. It might. It's why I recommend having a sell order out. But again, if there's a squeeze, I mean, look at Volkswagen in 2006. Yeah, let me. Here we go. Sorry, 2008. Here's the short squeeze of Volkswagen. Look how fast. This is not something you can just easily catch. I think a lot of people are underestimating this. I mean, if you think you can do it, bless you. Best of luck on it. I wouldn't recommend taking that risk. And I'll be honest, I don't think the potential returns on it are worth it either. Compared to what we can make in silver, 25 to 1,000. Just do the math in your head, please. If you invest $5,000, you'll walk away with $200,000. Good enough for me. Let's see here. What's your schedule for streaming? Also, do you like to talk about penny stocks? I'm going to try to stream every Friday starting now. And the idea is I want to do a deep dive on a stock once every 2 weeks. So I want to, like I did last time on Prosus, and you can find that video back on my YouTube channel. I want to do a deep dive on a single stock, talk about the fundamentals, teach you how I look at a stock. And after that, I want to, every other week, I want to do like a recap like we did now. Hopefully, as exciting as now, but I think now is going to be hard to beat. So started on an upbeat, right? So I think that's the that's going to be the schedule, and I want to do a monthly newsletter as well. But I'm willing. Kieran, wouldn't there be a ton of upper momentum for in the money calls and out the money puts ending this week? Maybe. I honestly haven't looked at the calls and puts. But there's a good chance that they will move rather aggressively considering the speculative values. Anyone else with any questions? Let's see, look at the Twitch chat again. And thanks for following the actual med. How do physical ETFs go up because of the manipulation? The manipulation doesn't make them go up. The fact that the price is repressed and the fact that physical is being ordered is what makes them go up. My theory is it will tank, and right before close, it goes up to like $500. I mean, Jay, if that happens and you're holding it and you have a sell order for 500, fantastic, but I wouldn't risk it myself. So, I worked at an investment bank in Switzerland. I can't give you the actual name of the bank because I don't want to get them or me harassed. But I worked there as an intern 5 years ago. And part of this talk, what I wanted to focus on was discussing how an investment banker thinks and how it works. So I'd love to answer some questions. If you have any questions about banking life, about how the work hours look, how the office worked, how we looked at things like penny stocks, and Jimmy just broke 300, by the way. Let's take a look. If you want to discuss those kind of things, I'd love to have some questions about that. I'm very curious what you guys think happens there. It was actually quite tame, quite timid what we did there. Nothing crazy. I've seen some crazy things, some things discussed, but you're definitely heavily getting into AGPSLV. It's great. I'm heavily into it too, so we'll enjoy the ride together. Beef Squatch, thank you for following, dude. Any tech stocks you're interested in? Yes, I am a big fan of chip tech. So ASML is one of my favorite chip tech companies. Yeah, this need I say more? I've been invested in ASML for a long time, and they're a very solid investment. Taiwan Semiconductors, fantastic. Marvell, fantastic. 5G play. Gaming, I'm big in gaming. How'd you learn to read the graphs? Is there any way I can learn? Honestly, I would say don't worry too much about learning to read the graphs, in my opinion. It's one of the first things I learned, one of the last things I used. And I mean that sincerely. But what you need to learn to do, and what stocks is for the most part, stocks is learning to read logical signs, learning to understand psychology and understanding market movements and what makes price mechanics work, and when is it not logical and why. And those are very hard questions to answer sometimes. But the important thing, I think, one of the most important things about being a trader is understanding the winners of tomorrow. I think that's my biggest advice, is finding the winners of tomorrow is so important. And it sounds so simple, but you don't do that by looking at the winners of today. That's a lot of things people do wrong. They look at the stocks of today like, wow, this stock went up 60%. I'm going to invest. You missed it. Odds are you missed it. Sometimes you haven't, but usually you did. What's important is look at the sectors you do know well. Research those companies. Research those sectors. Understand what makes them move. Understand why they're moving. And that will give you insight that's invaluable to pick your winner. So I know ASML is the number 2 chip tech company in the whole world. To me, they're going to be the number 2 most successful chip tech company in the world. And the thing with chip tech is it's hard to get into that industry. Right? It's very expensive to get into that industry. So there's nobody else that's going to challenge them anytime soon. Right? And they don't do the exact same thing as TSM, so they're not competing, not directly. In fact, TSM's geopolitical threats make ASML ASM more popular. So that mechanic, understanding that, is super crucial to understand that this is going to be not just a winner for this year. This is a winner for the coming 5 years. Chips can be found in anything from billboards, your phone, your fridge. Anything has a chip these days. Hey, McBattlefield, welcome, dude. And welcome as a follower. I'm Knuckles. Take a look at the Discord if you have any questions. Are people at the firms nice or absolute cunts? I spoke to about, let's say, 20% of my whole floor. And that's just because a lot of people are very individualistic, very, very busy people. The person I worked with, my mentor there, who still is, one of the people that I consider my mentor. He was super nice, super welcoming. Took me to lovely restaurants, showed me Zurich. Fantastic experience. There were people with absolutely nasty, nasty personalities there, but I think you have those in every work floor. Alpha personalities are common among traders. Emotions run high. So there is the kind of the stat side of it. Most of them are nice. And some were absolute cunts. But I think that's true for... Oh my, Robinhood's starting to limit AG shares. Right, well, if Robinhood's limiting AG shares, here's the good news. You can buy other silver shares. So you can buy Pan American Silver, Miner, and I'll put a large list of potentials in chat in a little bit. So I think it's on the back of liquidity issues, but if not, then that's very bearish for silver. We scared some powers that be. Not us 50, but, the people investing in silver. What's a good US chip stock? I'm a very big fan of KLAC, KLAC. They're going to have earnings on the 3rd of February, and now is an amazing buy zone. I would 100% recommend getting some. I got some right here. Got a lot right here. So I definitely recommend purchasing a lot of KLAC. What are you looking for volume? When you are looking for volume, what are you looking for? Do you just look at volumes? I look at consistency of volume. I look at what kind of moves you're seeing. So the thing about silver, look here. These are things, this is when volume tells you a story, right? What I want from volume is I want it to tell me a story. So one thing, I just look at the raw number of volume. Why? Because I want to see if a stock is traded enough. If the volume's low, liquidity is low, and it means that you cannot trade the stock fast. It means sometimes you'll put out an order and you won't get filled for 5-10 minutes. That can be bad. So you see that in penny stocks or small caps a lot. Even mid caps sometimes. The second thing I want from volume is I want it to tell me a story. And that's what's happening here. Here you see very clearly how silver is being manipulated. And that tells me a story. GME 380. I have it at 311. Don't forget to use the questions command, by the way, so I can see those questions. All right. And on that note, I'm going to end this stream. So I want to thank you all for tuning in, for watching, for discussing with me, for all your questions. It's been an absolute pleasure. I look forward to seeing you every week, hopefully. If you can't make it, of course, I'm always on the Discord, SMLC. You can find the Stock Market Live Chat Discord in the comment boxes below. Not the comment boxes, but the actual just boxes below. If you're on YouTube, comment box below when this video gets posted. Now the video is going to get posted, so my money's where my mouth is. If silver absolutely tanks, you can point to this video and say, hey, Joker, look at you, dummy. So here we are. I think I won't be a dummy. I think everyone will look back at this video and go, shit, should have listened. So thank you all for your attention and 50 viewers. Oh my God, I'm so thankful. So many new followers today. Super exciting. Hopefully, I'll find some time to do a little streaming as well in between. Just some random streams with games with people from SMLC, some Catan, some other stuff, maybe some games I personally play, and just talk about stocks casually. Probably will be smaller streams so we get more time to really one-on-one interact and ask questions. You're welcome, Tech Cookie. He said, good stream. I appreciate it, man. Thank you for the follows. See you next week with Elon on Mars. Dude, he's already been there. He's already laying down the groundwork for us to fly silver to Jupiter. We're going. We're ready. Hopefully, if you have GME and you're deciding to hold, you have a tight stop loss, and hopefully, if you do decide to hold, I was wrong. Hopefully, genuinely for you, I was wrong, and you get this squeeze you wanted, and you make a lot of money. I genuinely hope so. My risk appetite is too small for me to try. Glad you liked it, Gage. Awesome for you. Thank you for tuning in. Again, I can't say thank you enough. I'm super appreciative of all the attention. Thank you, Bear, for hosting it as well, and for hosting it on the bot and facilitating everything. Super glad to be on the Discord, and super glad to be part of the community. You guys are a blast to discuss with and share ideas with, to disagree with sometimes, and often also agree with. Yeah, everyone, you're awesome. Stay awesome. I'll see you next time.